Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and if you're new to this channel, then you can subscribe us by clicking the bell icon. Today we have a topic with us is interim financial statements. Just like there are full financial statement, there is interim financial statement. Interim means financial statement that are prepared in the middle of the year. So there must be some reason behind why it is prepared in the middle of the year. See, there's one dialog box. I want you guys to read this. The report in December 14, a report in the Japanese version was filed with the director of Kanto Local Finance Bureau of the Ministry of the Finance pursuant to the Financial Instrument and Exchange of Japan. We just go down, there is a consolidation balance sheet details that are given for interim financial state. No issues. We'll try and understand this in a detailed manner. First and foremost thing, I want you to understand what are exactly interim financial statement. Okay, this is the first thing that you should actually learn. See, financial statement that accounts for a period for less than, let's say, 1 year. For less than 1 year, they are termed as interim financial statement. Now, publicly held companies must issue this financial statement at publicly companies, okay, not others. They should issue at quarterly basis. Now that is must. Now this concept is most common applied to such companies. The purpose is to provide the other users of the and the investors updated information on the corporation's operations. Second, to get the timeliners, what we call as into the business operation instead of the waiting till the end of the accounting period, and are not available for long after the financial year close. Now, while allocating the investment capital, investors find periodic snapshots which eventually leads to a greater liquidity. Now, there are some features that you should learn of interim financial reporting. See, the concept of the interim financial reporting can be applied to any term of the period, such as last 7 years, 7 months, 5 months, right? So as of a specific point in time, such kind of financial statement only refers to uh, equity, assets, liabilities. The interim concept, it does not apply to balance sheet rather than over the period of time. So as they contain same document, interim financial statement are similar to annual financial statement. Remember that. Now the ones found in the annual financial statement will also match the line items appearing in the interim financial statement. Now the primary difference that can be found in the area discussed is what we call as disclosure. Now, disclosure of the few forms are not required in the interim financial statement or can be represented in the format which are more summarized. Second is accrual basis. So accrued expense can vary within the interim financial period. Like for example, an expense recognition may be spread across multiple periods or could be recorded entirely with one reporting period. Third is called the seasonality. Now, seasonality is what impacts the revenue generated by the business. Significant interim statement may reveal period of major losses and profits in such cases which are not at all evident in the financial statements. Third, are interim financial statements audited? That is a question here. Given the cost and time that is required for an audit and the requirement of the financial information, mostly interim financial statements are not audited in bold and are also very much condensed. Okay, only the year end valuation or the year end financial statements are audited. Okay, and not the we call as the interim financial statement. So it's quarterly financial statements are instead it's called reviewed. In India, it is called as the clause 41 of listing agreement, which specifically specifies things about a review, that is of quarterly statements that have been done and are much reduced from the employed in the audit. So it is encompassed by the review. Therefore, it becomes important to read complete and previously issued annual financial statements and reports. So it is very essential that the accounting practices in these statements must be what we call as regular with the accounting practices which will be followed in the annual financial statement in order for the interim statements amounts to add up to the amounts reported in the official income statement for the year. Okay, now let's understand the importance part of the interim financial statements. Okay. See, now we will discuss few other important concepts of interim financial reporting like IAS 34. The IAS 34 interim financial reporting requires that the interim financial statement either should be condensed or complete, shall include a couple of things like as at the end of the current interim period, a statement of financial fin position, and as at the end immediately preceding the financial year, a comparative statement of financial position. Second, two separate statement, one being profit and loss statement and another being comprehensive income, cumulative for the current financial year to date with the comparatives for the comparable interim periods, or probably a single profit and loss statement and another comprehensive income statement for the current interim period, and cumulatively for the year to date. That's called YTD, year to date. Changes in equity showing in the equity cumulatively, right? So all other details has to be mentioned. Now for the current financial to date, that's called the YTD, current financial year statement of cash flow with comparative statement for the comparable year to date period of the previous immediate financial year has to be presented. So in order to report the financial performance of the financial company, the interim financial statement are applied before the beginning of the fiscal year, before the beginning of the fiscal year, and at the end of the fiscal year, right? Now the series of the condensed statements are also included in this statement, which are helpful in covering the status of the company and the economic position. So the position of the company's financial status, income, mechanism of cash flow, and other related changes are many of the attributes included in this particular thing. So let me make my conclusion on this. The conclusion goes that, a public financial report covering a period of, let's say, less than 1 year is what the financial interim financial statements are basically all about. The common examples of interim statements may be a simple quarterly statement. Simple, it's going to be a simple quarterly statement out of the 6-month financial report. Interim financial statement, they are not at all audited. Okay. However, by providing the latest information through this interim financial reporting, the companies are able to timely communicate their financial performance to the investor and the financial analysts. That's it for this particular topic. If you have learned and liked the video, if you think that if you have enjoyed and learned watching this video, please like, comment on this video and subscribe to our channel for all the latest updates. Thank you everyone. Cheers.